XP Power. The ticker symbol is XPP and it's listed in British pounds. This is based in Singapore. So when I say in this video or in any future videos like a UK stock, I purely mean the currency. Singapore has had its independence from the UK since I think the 60s. So I'm purely talking about the currency itself, not that it's based in the UK. It was founded in 1988, pays a dividend 4 times per year, and the last dividend I received was for 36 pence per share. It's currently trading for about £15 and 33 pence per share. So they're in the technology sector, in the electronic instruments and controls industry. And to kind of make a long story short, they essentially design electronic devices that are essential to a lot of different sectors. So you can see a list of some of their products here, but they make critical electrical systems for industries like communications, healthcare, clean energy, the military. And it's what they would call critical electronic devices and electronic systems. At the moment, they operate in North America, in Europe, and in Asia. So this is how they're looking at the moment. And a lot of stocks that are in pounds are not doing very well at the moment. The pound has lost a considerable amount of value in the last couple of weeks, although it is recovering. There's big signs for a recession in the UK, so I think a lot of equities and stocks and things like that are going to be falling in value if they're British pounds, unfortunately. Well, Europe is in a very similar situation at the moment. So I'll leave this here if you want to have a quick read of it, but I've just kind of ran over the basics of what they do. And they essentially specialize in assisting customers in designing and building products within 4 markets. And these are industrial electronics, semi-fab, healthcare, and technology. And semi-fab is just another way of saying a facility that's involved in manufacturing microchips. So they're quite a large company. They've about 2,200 employees based in Singapore, but the stock is in British pounds. Their current market cap is £329.5 million. They have a PE ratio of 8.75, a current revenue of £240 million, earnings per share of £2, and a dividend yield of 5.63%, paying a dividend 4 times per year. Over the last year, their profits were quite good, at 9.4%, but over the last quarter is negative 28%, so not great. Things are falling. Over the last year, their debt to assets ratio is about 36%, closer to 37%, and over the last quarter is about 67%, so it's increased quite a bit. And their annual cash flow from operating is £36.4 million, from investing is negative £22 million, and from financing is negative £19.6 million. So it's another quite scary long-term graph. You can see that we're actually coming back down to, or we're even lower than the lows, the lockdown lows. So the company was founded in 1988, and this graph goes back to 2000, so it's not a complete graph, but it's quite a long history that we're given. And it has recently fallen down from pretty dizzying highs. It was £56 and 10 pence per share, and it's now down to £15, 28 pence per share. As I said a couple of minutes ago, it seems like a lot of the stocks and just equities in general are falling in the UK, and there's quite a lot of reasons behind it, but the general consensus seems to be a lack of faith in the new government and the policies of that new government. Now, I'm not 100% sure, and I don't follow politics very well, so it's just the kind of general feeling I'm getting from all the videos I've been watching and the things I've been seeing here, that the pound has recovered a bit from its fall, but that's after Bank of England intervened, and also the bond market is selling off pretty heavily as well. But in the case of XP Power, it's quite a large company, 2,000. Profits are decent over the last year, but not great in the last quarter. Same situation for debt. It was decent in the last year and not the worst over the last quarter. But I do believe that it will recover. You know, I can't say where the bottom is, and I can't say where it will go to, but time will tell. And as far as dividends go, paying 4 times a year is always nice. It's usually a thing that US stocks seem to do very commonly, is they'll pay 4 times a year, and the UK is usually twice a year. But these have paid 4 times a year for quite a long time, and it hasn't been consistently raising every single time, but in general, you can see every 4 payments, they're like trying to bump them up a bit from the last one, although they do fluctuate a bit. So it's certainly not bad. But as I've said many times before, when things get very tough, companies will cut and often just suspend their dividends, so it's never a guarantee. but this is pretty good for a long-term history. So to summarize it, I think it would be a good buy at the moment, but it could always go lower. As is always the case, as they say, you can always lose 100%. But it's considerably large. It's in a crucial industry, appears to be very well established and operates in North America, Europe and in Asia, and everything in the UK is falling at the moment, so I wouldn't be too hard on any particular one stock, but certainly do your research because they are in profit and they do pay 4 times a year, which is always nice. But as always, you'll have to make your own mind up, and I hope that you found this useful.